Over the last few weeks, the Indian stock markets have been facing some tough times. Except for last Friday, both major stock indices, the Sensex and the Nifty, have been on a steady decline. This drop in the market started after the indices hit new record highs at the end of September. Since then, both the Sensex and Nifty have fallen by more than 10%. One of the main reasons behind this market downturn is the behavior of foreign institutional investors, or FIIs. These are foreign investors, companies and individuals who buy and sell stocks and bonds in India. In November, FIIs have been selling a large portion of their investments in the Indian market. In fact, they have sold around $4.6 billion worth of Indian stocks. This large sell-off has put pressure on Indian rupee, and when these foreign investors sell their Indian stocks, they need to convert their rupee holdings into dollars. And this increases the demand for US dollars, causing the rupee to weaken and reach record lows against the US dollars. But the question comes, why FIIs pulling out their money from India? So let me tell you that there are several reasons behind the scene. The first is US elections uncertainty. So one key factor is the uncertainty surrounding the US presidential elections. With the possibility of a Donald Trump returning to power, global markets became nervous. Investors decided to pull their money out of emerging markets like India and invest in safer options like US government bonds, especially because the Trump presidency could bring higher tariffs and higher interest rates, which could affect global markets. The second factor is China's slowdown. Another reason is China's economic struggle. China has been trying to stimulate its economy, but the measures haven't been very successful. This has led some foreign investors to shift their investments to places where they might get higher returns, leaving India out. Then comes another factor is overvaluation of Indian stocks, which we all are known to. So over the past few years, Indian stock markets have seen impressive growth, but some analysts now believe that Indian stocks may have become overpriced. This concern grew after Indian companies reported slower profit growth for the July to September quarter, only 3.6%, the weakest in over 4 years. This caused some foreign investors to sell off their shares, thinking the market might be too expensive. So now the question comes that what are the other factors? So that means there are the chances that even the domestic scenario is a little bit different, and that is also affecting this FII selling. So while foreign investors are selling their stocks, domestic investors are stepping up to fill the gap. Now this is the positive impact of the same. So Indian mutual funds, insurance companies, pension funds and banks are investing more into Indian equities. In fact, domestic investors now own around 16% of the Indian stock market, which is nearly the same as the amount held by foreign investors. The shift in the investment landscape is helping stabilize the market. Even though foreign investors have been selling a lot of stocks, the market didn't fall too much in October, with both Sensex and Nifty dropping only around 6%. So looking ahead, some experts believe the current decline in stock prices is actually an opportunity for other investors to buy shares at lower prices. While foreign investors may continue to pull out their investments in the short term, most analysts don't think this will last for long. So India's long-term economic growth potential still makes it a promising market for the future. For example, Goldman Sachs has predicted that the Nifty index could rise by about 3% in the next 3 months. Despite the short-term challenges, domestic investors are expected to continue playing a key role in supporting the market, and the market is likely to recover in the future. So now let's wrap up this whole story. So in summary, the decline in the Indian stock market is largely due to the exit of foreign investors, triggered by factors like the uncertainty surrounding the US elections, China's economic slowdown, and concerns about the overvaluation of Indian stocks. However, domestic investors are stepping in to support the market, and analysts believe the current market decline may present buying opportunities. The Indian stock market long-term potential continues to make it an attractive place for the investments. So I hope you like this story. Till then, watch it first.
इस तरह की और वीडियो देखने के लिए हमारे YouTube चैनल को सब्सक्राइब करें और बेल आइकन को दबाना ना भूलें। यदि आप हमारा वीडियो Facebook पर देख रहे हैं तो पेज को लाइक और फॉलो जरूर करें। हमारे अन्य सोशल मीडिया पेजेस से भी जुड़ें।